So should you invest in SpaceX, and is right now a good time to invest? Well, today we're not just diving into SpaceX, but how do you think about investing in IPOs? Over the last couple of months, I've been getting family members, friends, colleagues all asking me, David, should we invest in SpaceX, and is right now a good time to purchase? And so today, as we discuss SpaceX in general, I really want to think about how do you consider investing in IPOs and where do they fit into your overall retirement plan and your retirement portfolio. So we'll dig into why is everyone excited. There is a lot of hype, a lot of big headlines about SpaceX as a company, and frankly, it is well deserved. They're doing some really interesting, cool stuff that frankly no one is really doing. And then we'll talk about FOMO, the fear of missing out. You know, as investors, sometimes our emotions can drive our investment decisions. We'll go through a few examples about how great companies can actually turn out to be not so great or even bad investments, and then give you a framework of a few questions you can ask yourself to better understand investing in IPOs. Does it fit in your portfolio plan or does it not? So all this excitement, and again, it is well deserved. SpaceX is doing things that many companies are not. Not only that, they're at the intersection of several different industries like infrastructure. They're launching rockets, aerospace, and defense. And something that's really important to note, when an investor looks at a company, how do they make money? Well, first and foremost, SpaceX is not reliant on solving one problem or one product. They have many problems and many different products that they're solving for. And who are their customers? The government. The government has deep pockets. They spend a lot of money, but something that's important to understand, government contracts are long-term. So that gives the company's revenue more stability, more resilience. And their clientele not only have long contracts, but very deep pockets to spend. If we just look at Starlink, for example, one of their products, Starlink can provide satellite internet literally anywhere around the world. And some analysts actually believe that Starlink could be one of their biggest growing revenue generators for SpaceX. And the reason that is because it's predictable, it's a subscription-based model, so it's recurring revenue, and on top of that, it is very scalable. And lastly, the technology lead that SpaceX has is pretty incomparable to everybody else. First and foremost, they can launch rockets, but they can do it in a reusable way. And because of that, that lowers their costs dramatically. Because it lowers their costs, they can do more launches. The more launches and success that they have, the more operational experience they have, the more revenue that they can bring in. The more revenue they can bring in, the more that they can spend on R&D and launching. And it's this really neat flywheel of acceleration and exponential growth in terms of the technology lead that they're in. So investors, when they're looking at investing in a company, well, SpaceX doesn't fit the traditional box and mold. I mean, it's sitting at the intersection of several different industries, which is why people are so interested and so many people are paying attention. But a great company, a great investment, and the timing of that investment, those three do not always align. And oftentimes our emotions or our excitement can cloud us from making very thoughtful, strategic investment decisions. So then we have to consider the fear of missing out. Emotions absolutely play a role in our decision-making in retirement, but the reality is really strong investment decisions don't come because of emotions. They come because of a plan, and they happen because of math. If I asked you, what's the last company that has IPO'd, you might say, David, I am not sure. Completely normal. Most people don't know. However, everybody knows about SpaceX. There's a lot of hype. There is a lot of excitement. There is a lot of headlines. If I ask you if you heard of SpaceX, you'll probably say yes, and you even know who the CEO and founder was. This is a really important distinction because with IPOs, at the time of the IPO, there's a lot of excitement. There is a lot of hype that can drive the value up. This happens to almost all IPOs, but SpaceX is no different. Matter of fact, I would argue there's more hype, there's more excitement with SpaceX. That doesn't make it a bad investment. It could mean it makes it at this time, is it the best time to enter the market and invest? Because The reality is great companies don't always make for great investments. And I'll give you a few examples. If we talk about Facebook. Facebook in 2012, when they IPO'd, they were a household name. You very likely had a Facebook profile. Everybody knew who they were. And yet after their initial public offering and they got put into the stock market where you could publicly invest, several months after, they lost over half their share value. The same thing happened with Uber. At the time of Uber's IPO, you might have had the app downloaded and have actually taken an Uber trip in the past. They were dominating in what their niche was in the industry. They were the dominant players. And yet after their IPO, they launched. A few months later, their shares dropped by over 40%. So we have two household names, Facebook and Uber, both incredibly successful companies, very much well known. But at the same time, after their IPO, their shares skyrocketed, a few months later plummeted, and they had to find their floor, and then they had to build back up from there. So moral of the story, we can have an incredible business. At the same time, the valuations could still be too high. So the biggest risk with SpaceX, for example, doesn't mean the success of SpaceX long-term is the biggest risk. It could mean right now, what investors are willing to pay for SpaceX may as well, could be the biggest risk. A really interesting statistic, they looked at the top 30 tech IPOs in the industry, and every single one of them had double-digit losses within the first 12 months. Matter of fact, on average, from peak to trough, meaning their highest valuation to their lowest when it tanked, was about a 54% loss. So how do you think about then investing in IPOs? Does it fit into your portfolio strategy? Does it fit into your retirement plan? Well, here are some questions that you can ask yourself when you're considering investing in a company into their initial public offering. So first and foremost, is this money you can afford to lose? Consider it going to a casino. If you walk into the casino and you're going to play blackjack or roulette, you can't be mad when the house wins. In the same way, if you're going to invest in an IPO, a very highly volatile, very speculative investment, if it completely tanks or you lost your money, mentally you should be okay with that. So number two, how does it fit into your overall portfolio allocation? If we're taking just a little bit of money and investing in the IPO, that's fine. It might not be increasing how much risk that we're actually taking in our overall plan. But if we're going to take a pretty large chunk, we need to be very conscious of how much risk we're exposed to because these stocks are very aggressive, very volatile, and very risky. One of our philosophies is called the maximum drawdown philosophy, which effectively is, in a severe market economy, in the market were to crash, what is your floor? If you had $1 million and you said, Dave, I would never want to see it drop below 800,000, that would be a 20% maximum drawdown. Based off of that risk, we invest in assets to get you the maximum growth possible without overexposing you. So you have peace of mind that in most economies, in most market scenarios, it should never fall below that 20%. Well, if we are going to add in a very highly speculative, volatile investment into the mix, we need to be very conscious about how that increases our risk exposure. Number three, are you investing because of the headlines, the excitement, and the fear of missing out? Or are you investing because it fits into your overall plan and your overall strategy? Number four, if nobody was talking about it, would you still purchase and invest? This is important because it goes to show, are you buying off of excitement and headlines? Or do you fundamentally understand the business and are really bullish for X, Y, and Z reasons, which is why you want to invest? So if nobody was talking about it, would you still invest? And the last one I absolutely love, would you be okay and still be bullish if the stock tanks? If you lose 50% of it overnight, are you still happy you made the investment and are you still bullish on the company? Answer those 5 questions and that will give you a lot of insight into what's actually driving you to invest, not just in SpaceX, but any future IPO of a company that makes the headlines and has a lot of excitement and hype around it. So should you purchase SpaceX? I'm not here to make a professional recommendation. I have no context onto how much risk you're comfortable with, how much risk you're currently taking, what your retirement income plan looks like, where the biggest risks are. But I am happy to give you what we're doing and our perspective on things. As of right now, we're not investing in SpaceX, and we're not doing that anytime soon. We're going to keep an eye on the business, a close pulse, quarter over quarter, track their success, and figure out over the next 12 months if and when there's a good entry point to invest.